First and foremost, hello everyone. Very glad to have you in sunny Cannes again. Alexis Aujabre, partner at White & Case M&A Infrastructure. Maybe we can have a quick intro of our friends around this, I would say, first-hand roundtable. Caroline, go ahead.
Yes, good afternoon to everyone. Very nice to see a full room here listening to infrastructure panel. I'm Caroline Kragerud, heading investor relations and fundraising efforts at Cube Infrastructure Managers. We are a European-focused mid-market infrastructure manager and very happy to participate to this panel today.
And we know each other for the last 10 years, 15 years.
So she had the questions in advance. So I'm Christophe Borde, Managing Director at Infra Capital. So we're a mid-market fund manager, predominantly based in Europe, and I'm on the origination side of transactions. So.
Nicolò Castagna, I head up Aon's infrastructure M&A practice for Southern Europe. We help clients do infrastructure M&A deals, both from an advisory and a transaction solutions perspective. And yeah, very nice to be here and looking forward to the discussion.
Hello, my name is Penelope Ditch. I'm a managing director within the investment team of ICG Infra, so European mid-market fund.
Hello, everyone. My name. Sorry. You know it works. Sorry for the start. Michel Andrévol. I represent Meridiam. I'm in charge of the capital raising activities. Meridiam is a global infrastructure investor which specializes in greenfield and sustainable infrastructure.
So we are extremely, proud and happy to have first-hand of investors on the, I would say, greenfield and brownfield markets. So it's going to be, I think, very interesting. And we're going to try to leave 10 minutes of Q&A at the end of the session with my friends. So just on this transition we discussed, less than 1 year, I would say, the consensus was that in this sector, infrastructure, resilience prevailed, right? With, frankly, a peak of investment, fundraising, but also on the deal side. Right now, we are in the middle of, I would say, unprecedented. I'm 45 years old. I think this is unprecedented crisis. We have massive war at our first doorsteps, energy crisis. Do you still think that the dynamic, the resilience is still alive? Nicola, maybe you can have this.
Yeah, I'll take this one because I think, as an advisor in this sector, we have the chance of looking at a lot of deals. So we've got a bit of a privileged standpoint, I think, from that point of view. And you're right, there's huge volatility, a lot of uncertainty, high interest rates, high inflation, etc. That is a fact. But I think the other, interesting fact, as you said, Alexis, is that, infrastructure as an asset class is highly resilient. Infrastructure investment is defensive in nature. Infrastructure assets do provide, most of them, a natural inflation hedge. So infrastructure investment is perfectly suited in times of high inflation. So I think the resilience, to answer the question, is still there. As I said, we've done and we've seen a lot of activity in the infrastructure M&A space in 2022. As Aon M&A, we have worked on around 140 different mandates across our EMEA platform, which is a very big number. Not all of these mandates resulted in successful deals, but we have also seen an increase in the number of deals that have successfully closed in 2022 if compared to 2021 in the infra space. So I think there's been a lot of activity, a couple of notable trends. One was mentioned by Alex already. Renewables have been very, very active. Clearly, there's the ongoing energy transition. There's ESG principles being increasingly adopted by infra fund clients within the investment policies. So we've seen a lot happening there. Portfolios of solar assets being sold in Southern Europe. and offshore and onshore wind deals in the Nordics, UK, and Benelux as well. So that's one. I think another sector which was not mentioned by Alex, but that we, at least as Aeon M&A, have seen particularly hot in 2022 are communications assets, in particular fiber networks. Clearly, our economies are becoming increasingly digitalized. There's increased data consumption needs from people and businesses all around the globe. So I think fiber is representing a very interesting asset class for funds like you, and I would be delighted to hear your views on that. So I mean, in summary, I think it's been a positive year.
So question for the players here right now, and if question is regarding who provides funds and money. Is this, I would say, optimistic view is still yet shared by your LPs? What is globally expectation for, I would say, this coming year and overall behavior, especially for those of LPs who have basically already matched their allocations? So do you think that optimism is still shared? Caroline, maybe. Yeah.
Yes, I mean, I think the figures that Preqin was showing just before really demonstrates that there's still a continuous strong interest for the infrastructure as an asset class. It's still an asset class that is growing and I mean, difficult I'm not an LP, of course. I meet a lot of LPs in my work, but it's difficult to tell how they see the world. But at least the feedback we get is that there is still a strong demand for infrastructure. Of course, we need to show that there is a good resilience to increase in inflation and to increase in interest rates and the turbulence we see on the market at the moment. So that's something we are working hard on as well, and staying disciplined despite more and more money coming into the infrastructure space. Then, I mean, other trends, and I think you share my views there, what we hear from investors more and more is that co-investment is a huge topic. ESG is in the Nordics becoming very, very important. In North America, we have a lot of questions about diversity. So, yeah.
And add some color?
Yeah, I would just add that in addition to resilience, clearly it's important to remind that for infra asset, inflation can be value accretive. So clearly LPs are also seeing the asset class as a defensive instrument. This is clearly the kind of dialogue we are having with the LPs. So clearly resilience, value creation, and yield also is something that we are discussing with LPs, something they are looking for and which infra assets can deliver.
And in terms of, Nicolas envisaged maybe some differences between the class of assets. You have been, for the four of you, extremely active last year. Have you seen a trend in terms of the class of the assets that are basically now defined as infrastructure? Have you seen a change, an evolution?
That's for me.
Oh, yes.
Yeah. Yeah. I mean, I think the gentleman from Preqin has given a good overview of the mega trends which are, pushing the pipeline. I think there is probably it's a very good situation that we are facing in the industry because we have very strong political tailwinds, which are, driving the ecological and energy transition agenda globally. If you look at the US, of course, with the famous now Inflation Reduction Act, the Infrastructure Investment and Job Act, which are really game changers that you see once in a generation. Europe as well. I mean, there is of course the EU Green Deal. There is more recently the Repower EU initiative to get rid of dependence on Russian gas, which will dramatically affect positively the pipeline for infrastructure projects. And as we were discussing, it's not only putting more renewables in the energy mix. It's also working on for example smart grids, better interconnections, new technologies like demand side management, where you can free up a lot of capacity if you work with this kind of technique. So it's I think the deal flow is extremely promising, and that should be very positive for the asset class going forward.
If I may, in terms of geography, you have been extremely active not only in France but also in Africa. So can you differentiate between the geographies? And still, are you seeing Europe, EMEA, as a promising geography for, I would say, greenfield, but also brownfield transactions?
Yes, I think the trends that we see are the same in Europe and in North America. When it comes to emerging markets, it's always more difficult for emerging markets when there is a global shock. So you need to be very careful. You need to be very disciplined in your investment decisions. We have a very successful African strategy, which is working well because we are on the ground, because we are developing projects rather than buying existing ones, and that is a model we want to continue doing. So to answer your question, I don't know what my fellow panelists think, but I'm very positive on the long-term outlook for the asset class everywhere.
I fully concur with, and Preqin made a very good introduction in terms of mentioning, so there's appetite for the asset class. There are new sectors, and I absolutely agree with you, Michel-André, because energy transition is definitely one aspect which is dramatically changing the infra world. It is changing, and one of the key points mentioned by Preqin as well was the average size of transactions, so which tends to be smaller because obviously energy transition goes through distributed energy. So meaning that the average size of investments and infrastructure investment is likely to decrease because you won't see multi-gigawatt of installed capacity going forward. So you'll have smaller facilities, whether it's battery storage, whether it's PV plants or others. So it's really key to have in mind that the mid-market is probably the key area of focus. Hydrogen projects will be also part of this energy transition overall. So the average size is decreasing, and also digitalization is something which hasn't been mentioned so far, but is a key new market trend of infrastructure in the world, which is evolving in terms of the way people are actually working and the digital infra which are needed to sustain this new way of working.
Christophe, maybe one word on, I think I am extremely interested by the hydrogen, I would say, coming boom bubble stuff. How you think that you guys, infra investors, provider of alternative funds, would be a player in what is, I think, the true, real green energy? Maybe not today, but this is, I think, some area where you guys could play a role. Do you think it's just the marketing stuff at this stage? Or is it a real, it's production, it's how you're going to convey storage, so it's a huge world onwards. Do you really believe it's going to be followed by you guys and your LPs?
So it's a mix of everything, and as Michel-André mentioned, you have to be disciplined in terms of the way you look at investments. So and timing is of the essence. So is hydrogen going to play a role? The answer is probably yes, at least for industrial reasons. Simply because from what experts saying, and I'm not an expert, but 15 to 20% of industrial processes require a flame, whether it's for chemistry or cement or other type of manufacturing. And the only way to decarbonize this flame is to use hydrogen. So at what point in time will it be the case? Is still a huge question mark. So it's something that has disciplined investors we need to monitor, and also for energy independence. The beauty of hydrogen is that you can have green hydrogen, not only blue hydrogen. So which is also a way to manufacture locally. A source of energy. So, and comes back to the point highlighted by Michel-André earlier about energy independence.
So Nicola, you wanted
Yeah, no,
to...
I think we've seen already some funds raising dedicated hydrogen funds, and that's very, very promising. Maybe just another, I mean, I agree with everything that my fellow panelists said. I think the outlook for 2023 is positive. The asset class is going to do well. I think for 2023, another maybe trend which we have not mentioned could be around transport assets, which clearly have been heavily impacted by COVID, roads, airports, ports, etc. Now, you know, traffic volumes have almost recovered 100% to the pre-crisis levels. So I think for investors, that asset class might also present some opportunities.
Yeah,
also,
but listen, I mean, logistics and infrastructure. I mean, I think there's discussion around could you consider logistics be an infrastructure asset? I mean,
and yeah,
we can definition it's not so sure, right?
Yeah.
It's a real estate infrastructure.
And I think there's also something going on around the electrification of transport and, you know, to respond to ESG, etc. So
going back to the energy and energy transition, do you think it's a bubble? But I think you already mentioned that. Is that something is going to remain relevant this year and is going to be inherent to all the other classes? What is your point of view? I mean, hot topic was frankly digital, I would say, 1 year ago, 2 years ago, and then we shifted to social infra. Now social infra is quite complex. You know what I mean? So maybe now the hot topic is energy transition. It was renewable, now it's energy transition. What is your point of view as professionals? And
Happy to finish if I wasn't clear enough before. It's a necessity, basically, so it's absolutely crucial. And I see some gray hair in the room, like mine, and so everyone will remember that. What is it, 15 years ago, 1 megawatt of PV was worth 8 million, right? Today it's 650,000. So I think that's the key answer to your question, is that it's feasible today. So it is going to happen. And we also realize collectively, politically, that we cannot heavily rely on external resources. And as a consequence, if our countries have this capacity to be independent, this has to happen.
Yes, from our perspective, the energy transition is extremely important, and that, I mean, climate change is one of the biggest megatrends and challenges we have, but it's something we can address not only by how we are producing energy, but it's as well a theme that is going across all type of assets and sectors that we are investing in. So for us, it's not a sector on its own or something independent. It's really something we want to work on across all types of assets, and where the digitalization is as well an important factor in Wave, enhancing, modernizing, and improving the energy efficiency within the transportation asset class, within the digital infrastructure, and in other subsectors as well. So I think that's really something it's not only about producing green energy, but it's as well about optimizing and improving and your footprint, carbon footprint, or in other areas.
And I think just one word of regulation and laws. Not willing to be boring here, but as you are mentioning, and there's also the taxonomy regulation, which is right now just a monitoring regulation, but at some point it's going to become a comprehensive legislation that will become mandatory, and that's concerns all industries. So, and it's a taxonomy is extremely, I would say, complex area when you have as an industry to consider your carbon footprint per se, but also what is your customer's footprint and so on. So it's something that will concern all industries and specifically the infrastructure also. Penelope, you wanted to...
just clearly all the stakeholders are more and more concerned. That's why you are seeing this acceleration. I mean, regulation, LPs, GPs, everyone, as you said, Caroline. I mean, that's why we are seeing this acceleration, and it's a very positive trend. It's accelerating, but it's a long-term trend. I mean, it's not only happening now. This is something that will not revert. I mean, we have no choice. So this is a very positive long-term trend that we are seeing for all the asset class, I believe.
I fully agree with you, and I think it's another positive tailwind for our industries. I mean, you say that taxonomy is about to come, but actually for the asset management industry, we are already facing the SFDR, for example, in Europe, which I think is maybe I'm not this view is not shared by everyone, but I think it's a very positive news for our industry because it will force managers to be very clear on what they want to achieve in terms of sustainability. I think it provides a lot of transparency for investors, and it can also favor, on the long term, the asset class, because if you want to make returns and be sustainable, there's not that many investment opportunities, and infrastructure is an obvious one.
I'm going to have, there's a consensus here about all we said, so I'm going to try to be a bit less politically correct for two last questions. One question is in Paris, 3 months ago, it was impossible to find gas at the station for, I think, 6 weeks more. Strange situation. What is your point of view in relation to the status of everything that is fossil? I'm not mentioning, transactions where we were working 10 years from here, TGF, gas transportation, it was the best. Nowadays, mentioning one of those, I would say, assets, you're going to just jump. What is, in your view, the place of everything that is right now related to fossil? And we need that to end up with the transition. Transition means that we are here, so we have to end up with the goal, and maybe the goal is in 10 years, I would say maybe in 30 years. So if there's a transition, how you see things in relation to everything that is related to fossil? It could be transportation, it could be everything. And we need that day-to-day basis. What is your position? And nowadays we are facing reality with the war, as I said, at our footsteps. And it's your position, but also position of your LP.
To reply on TGF?
But we don't invest in TGF, for example, anymore. But we invest in EVCS, so electric vehicle charging station. So clearly, this is one of the key trends we are seeing. And well, I can bet that maybe in 5 years' time, most of you will get an electric vehicle, and you have to. And please call us if you need a station. But clearly, this is something. This is a key trend, and we need to move on.
So what you're saying is that investing in fossil-related assets.
You have key question about what is obviously what the underlying asset base and your exit. This is not the trend. This is not where you want to go. So clearly, at ICG, we are not investing there anymore.
So there is clearly energy transition acceleration, which is an area of focus. And then coming back to your fossil question is also a question of timing and the potential role of hydrogen we spoke about before, and how some of the infrastructures could support an hydrogen value chain, which will be eventually the case. But there is so far a strong focus on the energy transition supporting assets.
In other words, what we are just now facing as a global crisis, maybe for infrastructure, is an opportunity because it's going to accelerate everything that was, delayed.
Absolutely.
We are convinced that as of today, it's a crisis, but for the infra asset class, there are a lot of capex to be done. And for the portfolio company, for the assets in which we are going to invest, there will be a lot of M&A and greenfield opportunities clearly to be tapped. So we need to be ready to be there to support the portfolio company, to finance them, and to grow. Clearly, there is a lot of growth to be tapped for the infra asset class, and the private sector will be key to be able to reach the target we are setting, and not only in the energy transition, but for everything.
Last, not politically correct, but I would say, Michel-André, that will be maybe for you. Most of the big assets are now, I would say, massively leveraged, honestly leveraged, quite leveraged, but there's debt. During the last, 2-3 years, debt was not expensive, it was for free. I'm, again, old enough to have known debt that was expensive during the last round of crisis. So now we are not maybe there, but it's going to be a bunch of debt in a lot of classes of assets that's going to need a refinancing. There's going not, I mean, it's a wall that will be coming here in the next, I would say, 2-3 years. It's classical. How you see this asset class of asset in infrastructure to react to leverage, debt, refi, and everything's related to that question.
But I think as a general rule, you should be very cautious when you play with leverage, and creating value with leverage is always a bit risky when the market is shifting, as we've seen. I think the infrastructure as an asset class is a very good asset class to put in place smart financings, which are perfectly which can be adapted to the situation we are facing. I mean, there's an obvious correlation between, of course, interest rate and inflation. So inflation should not be too much of a problem for an infrastructure business. At Meridiam, we like having long-term project finance in place with debt which fully amortizes and with fixed interest rates. So this kind of shift in rates doesn't really affect us, and we are not facing refinancing walls. But I think there is also one important point is that today the market is complicated if you look at the high yield segment. But when you are targeting an investment grade rating, with the right business, you have access to financing, you have access to the capital market.
But more expensive.
It's more expensive, but the increase is essentially linked to the increase in rates, which is linked to inflation. So over the long term, it should compensate. I think what we should be doing as asset manager is make sure that we don't expose our portfolio companies to refinancing risk in a complicated market.
Yeah,
but also, Alexis, if I may,
of course,
you mentioned refinancing, but there's a new trend as well. So at Infra Capital, we our fellow colleagues at ICG anticipated the electric vehicle investment, so which we started 3 years ago. And 3 years ago, there was no debt available for such assets. And today, I can guarantee there is debt, and some banks are actually in the room, if I can see them, are running after us to offer debts which did not exist at the time. So there's also a positive trend as far as financing is concerned for energy and energy transition and new asset classes, which the financing institutions tend to learn about now.
Just maybe Just another point, we've talked about banks. Insurance, I think, capital can also help on the M&A front in particular. So there's multiple solutions that at least we at Aon can structure to help de-risk infrastructure M&A.
Could you provide some detail on how maybe everybody's not aware of how you guys...
Sorry,
in practice, how you're going to help?
Yeah, basically the basic idea is to, again, de-risk a deal or an SPA. So there are insurance solutions which can be used to transfer those risks to the insurance market. I'm talking about unknown risks on one side via the so-called WNI policies. I think most of the people here should be familiar with those. But there's also solutions to transfer contingent risks of a known nature, for example, tax litigation, to the market. There's clearly strategic benefits of doing that, both from a sell and buy side perspective. So we expect more of that will come in the future. And looking at the asset class in particular, I think it's fair to say insurers do like infrastructure assets a lot. So they do recognize the low risk of the asset class, the defensive nature of infrastructure investment, etc. And that is reflected in the capacity that we at Aon can achieve and the price of the solution itself, which is very competitive.
Frankly, that was something that we are inheriting from the private equity sector. I mean, WNI, I mean, it's something that was and still is the market practice in private equity. It was not at the beginning for infra, but as you are saying nowadays, it is extremely facilitating all the transactions. There's no transaction where you don't have the sell side that is offering as a staple, and if you don't want to take a staple, the buy side could. I mean, I would say 90% of the deals last year, maybe more. You guys, I mean, are extremely relevant. It's not. I mean, prep work. It's really important. That is why I asked the question. I mean, I'm aware of how it works. So, but for the investors, if you guys are willing to sell the business without warranty because you are bought it without guarantee. So there's a solution. There's a cost. Somebody is going to take the cost.
Yeah, exactly.
But it is worth taking it very in advance, and I 100%.
It's a great way of
Absolutely.
providing a clean exit for funds. And as you said, there's been a huge evolution because 15, 20 years ago, there was no insurance capital available to do
now,
that.
it's in the not more and more in the hands of financial investors. It was shifting from industrials to financial investors that are used to that, and absolutely agree with you. Just to resume this panel, I would say my impression, correct me if I'm wrong, is that we are conveying a really positive. I'm a bit ashamed to say that because we are not in an extremely positive atmosphere on a day-to-day basis. Everything's not easy, it's difficult. But in this sector, my impression is that, fingers crossed, everything's doing pretty well, I would say really well. Is that something that you guys feel also? Michel-André?
No, clearly, I think
Caroline, everybody?
over the long term, it's positive for the reasons we've explained.
But also, I will summarize it in one word, which, because people speak about core plus, but in the end, infrastructure are essential.
Absolutely. And it's also really important for our sovereignty, which is extremely relevant nowadays. Caroline, maybe one conclusion word?
No, I agree with the essentiality. That's one of our key criteria when we make investments. But then staying disciplined to your convictions and to your investment thesis and where you think that you really can create value. And yeah.
So I think we can speak for hours and hours, but I think we are at the end of our session. I don't know if there's time for questions, but guys, go ahead.
Questions, sorry.
There's a question. There's the mic.
Thank you. Hi, my name is Matthew Astor from Cavendish Group. China's going to come back. We're not quite clear what that means. Would any of you please comment on how you would feel about Chinese LPs or co-investors in the projects that you are involved in?
Not sure I can answer the question, but yeah.
So sorry, I should say I've introduced a number of Chinese sovereign wealth funds to infrastructure projects over the last 10 years. So this is not a hostile question at all.
Of course.
Generally interested in any comments on the sentiment ahead.
I've not worked with Chinese LPs, so.
Yeah, sorry, I'm on the same.
There's one topic we should be bearing in mind is that there's this new set of regulation. It's extremely relevant. It's applicable everywhere in Europe. It's like FDI, foreign investment, you know that. Now we have this foreign subsidy regulation that is coming to force. It will be applicable, I think, within the 2 next months, applicable everywhere in Europe. So if you have in any transaction above a certain threshold, I would say, foreign investor, which is linked to a foreign state, that would be under the scrutiny of the EU Commission. It's a new layer of attention you may have for all your businesses when you have an investor which is not I would say, Europe-friendly one, and Chinese investors have been the target of that regulation. So we are in the middle of a new set of complexity that is to be extremely scrutinized by everyone. So be careful of the foreign subsidy regulation that is brand new. It's going to be more job for us. So
you need a good lawyer, right?
But I think, Chinese players have been very active in infrastructure, particularly in emerging markets. There are a number of very powerful, institutions. The Asian Infrastructure Investment Bank is not Chinese, but I think China is by far the largest shareholder, and these are very important players but more in emerging markets, I would say, as far as I'm concerned. And we are very happy to partner with them, of course.
What I said is just to mention that if the funds are linked to a foreign state, that may be considered as a data. You see what I mean? This is a topic which important in our jurisdictions, but apart that, we are very happy to have funds from everywhere. Other questions? Done? She said we are done. Marie-Ève, thank you very much. You have been told about, right? Who's speaking afterwards? Oh, we're leaving.